Manufacturing and services firms in Singapore have become less upbeat about business prospects for the second half of this year. This is according to official data released today. Here's Brendan Tenoto with more.
US-China trade tensions remain a concern for manufacturing firms. An Economic Development Board survey showed that a net weighted balance of 11% of manufacturers expect less favorable business conditions for the rest of this year. That's a poorer sentiment compared to the same period last year, where a net weighted 7% had been confident about outlook. The weaker sentiment was due to a softer demand for semiconductors and related equipment, as well as global uncertainties. Likewise, a Department of Statistics survey showed a souring of sentiment among services firms. A net weighted balance of 2% of firms predicted a more favorable business outlook. This is weaker than the 9% recorded for the same period last year. One economist says sentiment is unlikely to improve in the near term.
What would turn it around, really, obviously, some clarity, one way or another, of how the trade fight perhaps pan out, geopolitical risks pan out, whether it is in Europe or in the US or here in the Asia Pacific as well. Little reason for most business leaders to expect any meaningful shift.
Such varying outlooks have resulted in different hiring plans among businesses. For instance, general manufacturing and precision engineering firms are projecting a smaller workforce in the next 3 months. And in the services space, retail trade businesses plan to hire less as they anticipate lower turnover for the third quarter. All in, these sentiments also come as flash estimates released by the Trade and Industry Ministry earlier this month showed Singapore's economy grew 0.1% on year in the second quarter. Now that's the lowest in a decade. Now the ministry had also earlier narrowed downwards its full-year growth forecast to 1.5 to 2.5% from the earlier 1.5 to 3.5%.